Welcome, folks. So I hope you're all doing well. So in this video, we're going to talk about power of three. So the power of three is simply, in other terms, the Judas Swing. So so this is how you define the power of three using the diagram. So you're having that as the daily candle, and then we have that being the opening price, and this being where price close at New York. So this is the entire daily candle. So the power of three is simply, in structure form, we're having something like this. So like now, for instance, we are having this on Friday, and this was on Thursday. So on Friday we had pretty much of a range bond market consolidation during the Asian session and also during London. So there was not much of a movement during London. So what the power of three is simply is you taking the previous day, either the previous day's high or low, and then you aim for that same day. Let's say we are having these as our reference. So we're having these as the buy side, which got taken out right there. So the only thing that was left was the low of that same day. So it is so easy for you to determine the power of three. So you're having this, the opening price, we call it the manipulation. So we have the manipulation, and then we have we have accumulation, and then we have manipulation, and then we have the distribution. So all these back and forth price action right here was accumulation, so that we can have the manipulation, and then now we're having the distribution. So it is so simple, and it happens even in based on maybe a session open or the entire daily range. So you couple it with time. So like for instance, we were having NFP on Friday. So we had the consolidation right here, which was accumulation, and then we had this as the manipulation, which serves as a Judas swing. So prior to the release of NFP, we had this run high. It only went high to take out trail stops and maybe pending orders right here. So they were taken out right there, so that we can have now the real move, this being the Judas swing. So that is basically the power of three. It is as simple as that. You take the, for instance, normally in most cases it's only the previous day's high or the previous day's low which you see. Now like for instance on Friday, in proximity we were close to the high than to the low of Thursday. So it was so simple for us to take buy side first and then now aim for sell side. So it was so simple. Also you can see on this particular day, which was on Thursday, we have in these days, this was on Wednesday, we had that low which got taken out right there, and then now we had this move all the way to the upside, aiming for the buy side, which was taken out right there. So it is so simple. Here we're having the accumulation right here, and then we had the manipulation, and then we had this distribution. So mostly if you couple it with time, you get the best setups. So like now, for instance, here we had the theory that we usually use, saying that either London gives us the high or the low of the day. So we are having here London giving us the low of the day. As you can see, New York came really close to taking out that low, but immediately went back high. So even here, London gave us the high of the day, and then New York gave us the low of the day. So it is so simple. Mostly it happens on a range bond market. As you all know, we've been in couple of weeks, we've been in consolidation. So we are taking the previous day's high, aiming for the previous day's low, and so on and so forth. So it is so simple for you to determine the power of 3. Now here's where you couple it now with time. So we're having on Friday here, we were having NFP. So during NFP, we had this consolidation, which is the accumulation, and then we had the manipulation. So it was so obvious for us to short the market. So as you can see right here, this was the buy side. We had already taken out the previous day's high. So we had taken that, the buy side. So what was remaining was the sell side. So it was so obvious for the market to consolidate during London, and then during New York Open, we have the Judas Swing. As you can see, the move higher started on exactly at New York Open. So we had New York Open right there, and then we started moving higher, aiming for these highs and maybe the midpoint of this week. So we are having that at exactly 8, always referring to New York local time. So at 8, we started gravitating towards the upside, to these highs right there. So we took those highs, trading into the midpoint of that week right there, and then now we had at exactly 8:15, we started moving down. So you couple it with time, and then you obviously know if you've taken out buy side, what was left was sell side. Now you aim for sell side. Now during yesterday's price action, we had NFPS. It was supposed to be one-sided because, as you can see here, this was FOMC. So FOMC did almost nothing. There was nothing to wow anyone. So it was so obvious that NFP will do what FOMC did not do. So if at all FOMC did what NFP did right here, NFP would have been something like this, something that is not that big of a move. So it was so obvious for NFP to be wild like this and to be one-sided. So as we always know, we trade news. We treat news as maybe we have this run to the downside, maybe trading into such an inefficiency, and then reversing. It is always a two-stage event. But for this case, it was so simple to determine that due to the fact that FOMC did not do as we expected. So if you couple it with time, maybe you couple it with the silver bullet, for example. Let's say we're having London giving us the high of the day, like we had right there. So if London gave us the high of the day, it was likely that New York would give us the low of the day, and the time that we are going to get that was at 8:30, because all this was time distortion, whereby we were waiting for the news to come in so that we can short the market and take out the sell side. So it is so simple. Like now, for instance, on Thursday we had these lows, and also we had this low right there. So we took that low at exactly, let's see at what time. So it was at 6:15. So by the time we were hitting 7, which is the ICT silver bullet window of time, we had already taken out the sell side right there. So it was so obvious for us to aim for the buy side, right? Be above these highs, above this high, trading into this inefficiency, and also maybe targeting this high, the previous day's high. So we are having this as the manipulation. We had this as the distribution and then the manipulation, and then now we had the real move, which is the distribution. So it is so simple. Couple it with time. You can trade the Judas swing. Like for instance, right here we had, let me zoom in a little bit. So right here we had if I take that, anchor it to that high. So at 4:45 we took out this high. Note that this low did not take out this low. So it was so obvious. We went for buy side first, and then we had this sell, aiming for this low. So immediately we took that low, we went just a little bit the downside, and then reversed. So at exactly 7, let me show you something. At exactly 7, you can use the top of the hour, you can use anything you feel like, couple it with the power of 3, and then trade that. So we have a gap right there. So we went above and then came all the way down at exactly 7, trading inside an inversion fair value gap. So we are having an inversion fair value gap at the right time, after we had already taken sell side and the manipulation is over. So it was so simple. Going long right there, aim for these highs, or the 50% of this dealing range. Let's say from this low to this high, aim for 50%, which is somewhere around there, which could have been hit very easily. So if you couple the power of 3 with time being the number one factor, then everything becomes super easy. So it is so simple. Backtest on that. It happens. Literally, it happens almost every single day. It doesn't happen. Maybe it doesn't happen every single day, but almost every single day. So it is so straightforward. It is so clear that we have already taken out sell side. What is remaining is buy side, which is so simple to determine that. So you might not be trading the entire daily range. If you like to, it's okay, but for me, maybe such a move from this inversion fair value gap to the midpoint of this, or maybe this high, that would be enough for me. So it all depends with you. If you are trying to get from the low of the day to the high of the day, it can still work. Anything can happen, it can still work. So it depends with the person. Maybe I'm a scalper. If you are a scalper, maybe from down here to this high, or maybe you're trading into, maybe you're having such, because here we had a low, high, low, low. So this was a breaker by itself. So trading into, let's say, such an inefficiency right there, that would have been your exit. So it doesn't matter. What matters is you've had that entry, go into a lower time frame like the 1 minute chart, see maybe a shift in market structure, something like that. Any entry model that you use, then going right into the market, trade an obvious setup. So it is so simple. Just wait for the manipulation to end, like we had here, and then now trade the real move, which is the distribution. Same case here. So the manipulation and then now we had the distribution. And it is so simple. Every top of the hour, let's say 8:50 to 9:50, you will always run on liquidity or run into a fair value gap. So it is so simple. It was so simple for 8:15, for 8, exactly 8, to start pulling to the upside, taking out the buy side, so that we clearing anyone who was short prior to this big move. So the same thing is happening here. So let's say, for example, someone went long in maybe trusting that this is support, and they went long right there. So this manipulation will serve as a move to take them out, so that you can now have the real move of the day. So it is so simple. Just wait for the right time. Know that this is the manipulation, and then now trade the distribution, which is the daily range or the real move. So it is so simple. It is time, and then the narrative. Where is price, and where is it likely to go? Do we have, maybe, like for instance, here we had NFP, which is a catalyst to price. So it will accelerate price to this level, which is okay. Here also we had news. So we came all the way down, taking out anyone who was long, and then went all back all the way up. So we can treat these as the New York manipulation, so that we can have now the real move, because here we have the accumulation right there prior to New York, and then New York open, blah blah blah, at exactly, I think, 10 we had this as the Judas Swing, or the false move, or the manipulation, trading down. The aim for this manipulation was to take out anyone who was long from down here. So it was so simple. If someone was long, maybe they could have traded their stops, or they entered somewhere in here. So it was likely we sweep them first before we have this move. So it was so simple. It is always that simple. So whenever maybe you're having, like for instance, we're having such a day whereby we anticipate for the power of 3 to occur, during London is when everything will kind of happen, because London will either give us the low of the day or the high of the day. And now you couple it with other PDRAs. Let's say, for instance, here we had a breaker, low, high, lower, low. We took out sell side. So this becomes a breaker. So you extend that through. As you can see, price was held above, but we had this spike down because of news. So we expect, during news, we expect such things to happen. So it is always so simple. We're having a breaker, we're having this being the manipulation, and then the accumulation, then this the manipulation. So you can go long right in here, and then your targets be above that high, this high, and so on and so forth. So I guess that's it for the power of 3. This was the 15-minute chart. It is so simple. You don't need the daily chart to determine the high or the low of the day. If you know, like let's say I see this was on Thursday, so I know the high of Thursday was right here. So it is so simple. If we take that high, immediately I'll start looking for setups at the right time for us to short the market. So it's that simple. So I guess that's it for today, and until I talk to you next time, be safe.